Hello everyone, this is Eric Lewis from Income Trading 101, doing another technical analysis video. Today we're going to talk about Bank of America stock. Today's date is October the 23rd, and I'm using end of day prices to take a look at where this stock might be headed in the future. So here's a price chart, and of course I'm using TradingView charts. I love their charts and all the indicators that they provide. So this is just the daily chart. The last year, you can see we've kind of been in a very strong sort of channel, looking for low prices in the mid 26s, high price essentially we're creating now, but really that 31 level, $31 per share level has been the top of the channel. We are basically above the channel for the last 2 days. Let's take a look at some moving averages. So when I look at the moving average, I don't get a lot of indication from this, and the main reason being the fact that it's channeling. When you have a stock that is not trending in any particular direction, up or down, it tends to make a lot of these indicators, a lot of the more basic indicators at least, somewhat irrelevant or less useful. You can see right now all of the moving averages are in line. So the 10 is higher than the 20-day, which is in the red, which is higher than the 50-day, which is in the blue. That tends to be a sign that the stock is going higher, but the more overarching theme has been channeling markets. So I really just sort of take this with a grain of salt. And let's take a look at the 5-year. And I went ahead this time and left the moving averages on. When you look here, we'll say June of 2016 through the beginning of 2018, where you had more of a sustained upward trend. You did have a period in the first half of 2017 where the stock really did go through a channel again, and then it had a breakout. But aside from that, pretty much from mid June of 2017 or mid 2017 through early 2018, you had a situation where the stock was in an upward trend. And now, really, since the end of that previous trend, we have been sitting in channeling markets. We did have a breakout to the downside, but it pulled right back within the market within a couple of days, within a couple of weeks, really. So the support and resistance levels of a channeling market can truly be too strong to overcome. And if you looking at this chart, aside from that one uptrend, this has been a stock that tends to trade in tight channels. So you definitely want to keep an eye on that. And of course, throwing out a Fibonacci retracement of this last move, it's still, and when I say the last move, I'm talking really it was part of a channel, just slightly downward channel. This doesn't give us a lot of indication either. I don't know if you see anything, but for me personally, all I see is a reiteration of the fact that we have a channel. And what's interesting too is that the top of the channel is basically at the 78.6% retracement line of this last slight trending market, and the bottom really is around the 50. I'm sorry, around the 38.2%. So you have a channel that is really being defined by the tighter Fibonacci analysis levels from the previous move or trending in this market, which even then is only minimal. Although I guess in real terms, you had the stock go from $33 a share down to roughly $22.71 per share. So that's significant. I mean, that's a 30% move. So I shouldn't discount the value of that last trending market, that last downward trend. But I do think it's really interesting that we see the current channel bouncing between the 78.2, I'm sorry, yeah, 78.6 and the 38.2 levels. Those are significant Fibonacci levels. So I'm going to take the Fibonacci off, and of course I always look at the MACD. I like the MACD for a number of reasons, but in trending markets, once again, because this is based on moving averages, this still doesn't give us that much indication. It's not that it doesn't give us valuable information, it's just that I trust the information much less. For instance, you can see scenarios like here in early 2019 where we had a cross of the moving averages above the zero line, and you would expect that to lead to a downward trend. But when you look at the stock price, it really didn't do that much. We got one movement down here. That would have been in late March, just before April, and that wouldn't have accounted for you probably entering a short trade somewhere back in what would that have been, sometime in February. So again, channeling markets make a lot of these indicators somewhat worthless. So let's just look at the support and resistance line. And I drew both support and resistance here, and I extended it out so that it included that last trend. So essentially, we talked about it with the Fibonacci analysis. This is really just the drawn out support and resistance. And you can see right now we appear to be breaking out, but I don't trust it just yet. I would actually be more worried about the fact that up here closer to $33 a share, you have previous resistance. So even though, given what I drew in, it appears like we are going through a bit of a breakout, I just wouldn't trust it. And I'm sorry, that would actually be the $32 level. We would really have to go up above that before I trust that we've exited the channel. So in summary, this Bank of America stock has been in a channel for nearly a year. The moving averages are inconclusive. The Fibonacci retracement is inconclusive. However, it did show that our current support and resistance levels are actually Fibonacci levels. And then the MACD, of course, is rendered somewhat useless for this. But the support and resistance lines are affirming of the fact that we're trading in a channel. And until there's a strong or sustained breakout, I wouldn't trade against the channel. So that means that right now I would not be looking to buy Bank of America stock. In fact, I would be preparing to short this stock, expecting it to stay in the channel. I've not been a good channel trader in my past, but I always like to use the information that's there just in case. So right now you might be thinking, oh man, we're about to break out, we're about to go to the moon. I would just say put the brakes on, wait a day or two, maybe even a week or two, and see if we truly sustain a breakout. And if we do, then I would look to buy this stock. Otherwise, I'm looking at just saying, okay, we've hit the top of the channel once again, and I'm expecting it to trade lower. I might not do that with the actual stock. I might do that with options instead. I'll be telling a little bit more about my background in an upcoming video, but I also have a weekly option trading podcast where we talk about strategies that can be used in these scenarios. So for those of you who know options, in a channeling market, it's great to trade a strangle. If you don't want to sell the strangle, though, you can always just create the spread around it by turning it into an iron condor, where we would be selling a call spread on the upside and selling a put spread on the downside, expecting the stock price to end in the middle. And one of the reasons I'm looking at Bank of America stock is I love the options on this stock. They have great liquidity and great pricing. So that's it for today's stock analysis. I hope you guys have a great day. Happy trading.